Good afternoon, esteemed traders and investors. Today is Monday, June 22nd. I present to your attention another market review for InstaForex. As always, I'm glad to be here with you today. So last week, a solid batch of trading ideas that we gave some time ago worked out quite well. The general trend of the strengthening US dollar has cut across many instruments, majors, and so on, but not all targets have been reached yet, especially for the euro-dollar pair. Therefore, throughout this upcoming week, we are waiting for further developments to unfold. As for the important news, on Tuesday and Wednesday, there will be construction and housing market data, and then on Thursday, we will see core orders and the latest GDP figures. By the way, it's interesting. The second half of the month for the dollar includes Initial Jobless Claims on Thursday. Basically, it's going to be a powerful news day. Let's see what we can spot on the charts. Let's go! So, let's start with gold quotes, which dropped significantly last week. Actually, it's not surprising. This decline has been going on for more than a month now, you could say since February. But what's encouraging is that it's happening in a pretty technical manner because we've already seen the first 3 waves out of 5 and the instrument has basically paused. Finally, the new trading week has officially kicked off with a slight increase. Last trading week wasn't a signal week, meaning it was just a standard and routine weekly trading session for us. Here is the inside bar on the decline, which by the way, cut into the liquidity of the week before last, but I decided not to interact with it at all during the week before last either. There might be a certain level of intrigue here, but looking at the situation overall and generally speaking, the entire chart pattern we observed throughout last week was primarily created by the OMKI. Following this formation, the instrument experienced a fall, but it did not actually test the long break zone that had been formed during the week before last. That is, the instrument is positioned between impulses, between last week's short impulse and the previous long impulse from the week before last. And in fact, this is where the main events will unfold. For buying, I was given a test of the long break. I thought this would happen at the market open, but it didn't happen that way. Basically, from the perspective of liquidity accumulation, I don't see anything interesting here yet. That is, there are no horizontal accumulations. Yes, the instrument has fallen. The instrument is trading near its quarterly lows. But for now, there's nothing particularly interesting for us. If you missed the 3-wave structure on the FOMC, there's nothing to do here for now.
Looking for real trading advantages? InstaForex offers the lowest spreads and commissions. On major currency pairs, our conditions are better. Lower spreads and only $5 commission instead of $7. That's real savings for every trader. And now, let's get back to the market review.
The euro-dollar pair. The weekly time frame has officially concluded with a strong bearish engulfing within the short-term trend that has continued all the way through May. And on the weekly time frame, we still have untouched extremes. This is the 1.31 level. The level of 13,900 is the lowest price point from last summer, which was successfully retested in March of this year. We've approached it again in June. I think that in the near future, the instrument will continue to decline. And this will be unpleasant news for buyers who set their stop losses at 1.13910. Accordingly, last trading week showed that the downward momentum continues and there are potential price targets located further down. From the current prices, we can still continue to decline about 600 points further, and this is already well underway, but of course, there is a possibility of provocations. These are upward spikes, and for us as speculators, this represents an opportunity to enter the market at the best prices in such zones. On the 4-hour time frame, one specific zone is visible, but on the 15-minute chart, 2 distinct zones can be seen. It would certainly be highly interesting to see a scenario with such a significant shock for the short sellers. For example, during the test of the June 18th crash and a move downward, potentially already breaking through the monthly lows, these annual low points and the potential here would be quite substantial, about 1,200 points if the provocation drags on. My friends, this does indeed happen. You can look to sell higher at approximately the 1.15800 level, and the downside potential for profit here increases to as much as 2,000 points.
I also want to remind you that every InstaForex client automatically receives loss insurance. For every $1 of compensation, only $4 of your friend's investments are required. Just submit a request, and your losses will be recovered. Let's continue with the review.
The British pound versus the US dollar pair on the weekly time frame is mirroring the euro versus US dollar pair almost exactly, except for some specific and significant yearly levels. Furthermore, last week was also characterized by a very strong bearish engulfing move, which is already breaking through this long-term structure. And this is already a signal for updating the year's lows, roughly the same as for euro, US dollar at 1.31554. And right here, for those who did not sell yet where I mentioned, the trading plan is exactly the same as for the euro. Consider selling on a pullback to strong and reliable resistance levels. And by the way, the Asians have already had a chance to view my review, which I'm recording right now, but the logic is basically the same. A test of the short breakdown and further selling. If they don't give a deep enough test, then of course there's nothing to do here in terms of selling. If they do, then the nearest short breakdown zone, just like the first one for euro, US dollar, is at around the 1.33 level. If we get a pullback here, then from there you can short on the breakout. From the 1.31554 level, a potential move of 1.5 figures is nothing to sneeze at either. As for the dollar-Canadian pair, it's growing by leaps and bounds, leaving a lot of money behind at the bottom. All of this could of course get shaken out, but for now there are no reversal patterns within the year. On the weekly time frame there is no stop, so we are not touching this instrument.
With InstaForex, you can triple your profit. For every $4 of your friend's investments, you automatically get an extra $1 added to your profit, with no extra conditions.
Dollar-yen. The dollar/yen pair has completely ignored the Bank of Japan and all its attempts to present itself as something serious. All of this is just a complete and utter farce. Those impulses were meant to shake out the robots working on devaluation. But they completely failed to achieve anything. There are even some downright absurd and laughable stories about it. On June 18th, for example, the instrument crashed by almost 1,000 points, but this was completely neutralized by speculators, by their algorithms. The instrument continues to rise, but let me remind you, the futures contract is inverted. On the futures, it's actually falling. There are no setups for growth. There is no attack, so we are not participating here. We're just watching the instrument. Be careful with opening shorts, because the extremes from 2024 are just ahead, and there's not much distance left to them. I think stop orders will start getting triggered here, and we're talking about serious players now. As for oil and the latest obstacles on the way to peace agreements, they have driven and pushed oil prices up. Well, it's perfectly logical and expected that there won't be a quick peace there, and there could be a lot more challenges and obstacles ahead. But what's interesting about oil is that, more or less, a technical round level is clearly visible and identifiable around 80. There were some small consolidation zones around 76. We can observe that there is a long side breakdown occurring right around the 75 mark. If they happen to provide good prices around, let's say, the 75 level, and with the clear confirmation of long impulses, you could try going long for a breakout at the 80 mark. I honestly think that would be the right move to make. The potential risks are roughly $2, and the profit is almost $5.
We also have a great offer. Fund your account and get a 30% tradable bonus. Trade with additional capital and expand your opportunities with InstaForex.
As for Bitcoin, Bitcoin continues to die on the weekly charts. Last trading week gave us a pin bar in a bearish trend, which suggests that nothing good is in store for buyers here. In this setup, of course, it's better to look for signals to go short. At the moment, the break of the bearish structure happened last week, but it was rather weak. But who is ready? Are you willing to take the risk from here with stop losses? Last week, you could have easily traded that little pin bar on the 15-minute charts. Here it shows us that, basically, the downward short impulse was clearly there, just like we saw with all the other instruments during the FOMC. Here's the FOMC crash and then a gradual recovery. Accordingly, if they give a test of the FOMC area around 65 to 700, you can take this part of the move. The American stock market is gradually moving sideways. I gave a trading idea to short the instrument after the S&P 500 broke down during the FOMC. So the FOMC caused a crash, a test, a supply zone, and attempts to sell the instrument. It dropped twice, it fell on Friday, and it fell again at today's open. But it's gradually being bought back. Be careful with this wild guy. If it doesn't drop right away, it's better to close at break-even because there have already been 2 attempts and it's slowly recovering. This instrument has been growing for the past 40 years, could keep growing for the next 40, and might continue for another 40 after that. Friends, InstaForex offers a free consultation with a personal trading consultant. Follow the link in the video description, fill out the callback form, and gain access to exclusive offers and special trading conditions. BRT Plus for risk-free trading. That's all. Trade with InstaForex, subscribe to the channel, and stay tuned for new reviews.